Hello everybody, my name is Christian Charlo. Today we're Thursday, February 5th, 2015. Welcome to this Market Chronicle. Today folks, I want to make first of all a follow-up on the last Market Chronicle about the energy sector where we had a bearish movement and talk about a rally that we have today among the real estate sector on the Canadian side. What happened though is that last week when I made a chronicle around January 28th, we did have the SPY that was going down and that could easily head towards that bottom of January 16. But why we had that rally though is because we actually had the confirmation of a bullish divergence on the SPY. What is a bullish divergence? Look at this. The bottom that we reached on January 16, this is where the histogram was. While this bottom here of February 2nd was actually lower than the bottom of January 16. So normally we would have expected the histogram to be lower than this one here, but it wasn't. It actually was higher, and that was a clear signal of a bullish divergence. So the call I did last week about the energy sector, about the bearish momentum of the energy sector, didn't work. Several of the bullish ETF that I've mentioned, bearish ETF that I've talked to you about, have not performed well. If we take a look at the oil situation, what we had though since January 28th is we had actually a clear reversal of this downward trend. And look at this here. The moving average are hedging higher. The 10-day moving average, which is in red, could cross the 30-day moving average. And that will confirm definitely the strength of the bullish momentum on the energy sector. Right now we are bounded by the 50-day moving average and the 10-day moving average. So we could expect a stabilization phase around this area. But the fact that the 10-day is moving closer to the 30-day moving average, it's a signal that the rally that started a few days ago could actually continue on the energy sector. So the bearish ETF I've mentioned, such as SCO, which was an entry point on January 28th, well, I told you that you have to get out below 90 bucks and you had to respect your exit point because that's what we had, a clear reversal of this upward trend. So you had to get out. DWTY, same scenario as well. On the energy sector on the Canadian side, there were two bearish ETF, there were one bearish ETF that I've mentioned. Also on the one on the US side, it was HED. On January 28th, it was doing well, but it did break that support. So you had to get out of that positions. And ERY, which was the bearish ETF to trade the energy sector on the US, actually broke down that support. So those positions are positions where you should get rid of them. Now, concerning our short positions that we recommended on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. That position was SPN. If you take a look at this, we had a target to take some profit around 17 bucks. Finally, the stock did break that support, so we had to close that short positions. So it was not a call that performed well. However, I think several energy stocks could be watched though. If ever we have oil that's able to break the 20 bucks resistance, that will definitely be a lot. There will definitely be a lot of opportunities to get into the energy sector. And I'm going to show you some stocks that we publish on marketgurus.tv that you can have access for free for 10 days. And those stocks could actually perform well if ever we have a rally tomorrow on the energy sector. And this will all be due if we have a positive employment report. And stocks like Cameco, higher than 1921, could be a nice opportunity to get in. Stocks like Bankers Petroleum, higher than 331, could be a nice opportunity to get in. If you want access to the full list, it's all on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. Now let's take a look at the movement in the real estate sector. On the Canadian side though, it's actually a clear bullish cycle that we have in this sector. There are several stocks that are breaking out today that are actually totally overbought. So the type of stocks I'm going to show you are actually stocks where we actually have the stochastics that is just leaving the oversold situation, which means you have more room to go before they reach the overbought situation. And this increases the probability that today's rally might continue on those stocks. The stocks I'm talking to you about are stocks like, for instance, Killam Properties. Look at that stock here. Just slightly leaving, the stochastics is confirming it's testing the low of this downward channel. Could actually continue to go up there at 80%. So Killam Properties, if you're buying that stock, 1087, this is where you could put your exit point. Or if you're willing to be more patient because it's the real estate sector, it's a sector that moves more slowly, you could actually, instead of getting out at 1087, you could put an exit point, let's say around 1080 on a stock like that. First Capital Realty, 1938 is the exit point. So far, it's a clear entry point on a stock like that. If you're willing to be more patient, you could put an exit point around 1912, which corresponds to that former support of January 15. Communal REIT, also a nice one as well. Look at here for the stochastics, just leaving the oversold situation. So on Communal REIT, if you're buying that stock, you could put an exit point around 1928 or below around 1911 if you're being more patient. And let's not forget Granite REIT with an exit point around 44 bucks or around 43 on the clear reversal of this important upward trend on Granite REIT. So all those stocks I've shown you in the real estate sector are breaking out. However, as I said, it's a sector that moves slowly. So you could either put your exit point closer, which means to the support that we have right now on those stocks, or a little bit lower whenever the stocks reverse their important upward trend. And I've shown you the exit point on all those stocks today that are actually breaking out in the real estate sector. So those are all the breakouts. Concerning the energy stocks though, so far the call to actually short the sector is not valid. Right now we have more bullish momentum on oil. The moving average could cross each other. So if we do have a breakout on oil after the employment report tomorrow, we could actually have definitely several stocks in the energy sector that could break out. And if you want to have access to the full list, it's all on marketgurus.tv. So this was Christian Charlo from marketgurus.tv. I wish you a good trading and see you next week for your market report.